Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is June 14th, 2024. It's Friday, TGIF. In the Kickstart video, I take a look at three of the major currency pairs, the euro versus US dollar, the dollar versus yen, and sterling versus US dollar from a technical perspective. Let's get started. Let's look at the 4-hour chart of the euro versus US dollar to start things off. And yesterday in my updated video on the euro versus US dollar, I looked at this swing area right through here. The market had moved sharply to the downside and was back down testing this swing area. This swing area was developed going back to, I guess, February and in the month of March, and then it was continued into the month of April and May, right through here with some swing lows and swing highs. And in trading earlier this week, the price came down to the low of that swing area near this 1.07208. That level also happened to correspond with the 61.8% retracement of this move up from the April low to the June high, and found support buyers against that level. We pushed sharply to the upside there, of course, helped by data and such. CPI data came in weaker than expected, pushed the euro to the upside, the dollar down. We did move back above the 100 bar moving average on the 4-hour chart, but only briefly, and the market then started to rotate to the downside, falling below things like the 100 and 200 100-day moving average, 200 bar moving average on the 4-hour chart, and then the 200-day moving average in trading yesterday. That opened the door for further selling pressure, and we're to return back to this swing area right through here, where we did find some support buyers into the close. But in trading here today on this 4-hour chart, the price did eventually move below the low of this swing area, and that opened the door for further selling in this pair. And we are back down testing this. We start to look at these swing lows through here as next targets for the pair on the downside, and we've hit one of those swing lows on the way to the upside back through here at the end of April. So, what does the move today suggest? Well, what we know is that this area right through here was indeed a floor-ish type area with in between the 1.07198 and 1.07346, and as long as we stay below that level, that the bias is more to the downside. It all started earlier, of course, with the breaks of the things like the 200-day moving average and the 100-day moving average, but now it adds to the bearishness by breaking below this swing area. So this is going to be the barometer or the risk-defining level for both buyers and sellers. If the price stays below that level, the bias remains more to the downside. If the price starts to move back above that level, then any dip buyers, you could possibly see dip buyers against this low right here. But so any dip buyers would feel more confident getting back above that level. So this is the key area right through here. As long as the price can remain below that level, the bias remains more in favor of the sellers. If we move above, it's more bullish. Let's take a look at the dollar versus yen. We had the Bank of Japan rate decision today, and there was lots of chatter about that they were going to start cutting back on their bond purchases, but they announced that, well, they are, but not until July when we see more, blah blah blah. That sent the yen lower and the dollar yen higher. But then things started to reverse back to the downside. We did break above this level at 157.708, but could not be sustained, and the market rotated back to the downside. The that move to the downside pretty much retraced the entire move higher. We had moved lower earlier in the day before moving to the upside off of that decision. So nearly a full lap to the upside and downside for this pair. In the process, this area right through here where we had swing highs through here, forming this area right here. Now it did break above that, but then reestablished resistance through here, started to make this ceiling here between the 157.40 and 157.46 level. Well, guess what? That's back in play. We had the corrective move up back into that area right through here, and what did? We found sellers against that level. So let's like over here where the market moved above this area and then established the level. We're going to use this break to the upside as just don't see it. and instead see the old ceiling right here. So that's going to be our barometer for both buyers and sellers trading here today and going forward. If the price is able to stay below that level, then maybe we rotate back to the downside and get and stay below the 100-hour moving average. It's been toying with that 100-hour moving average all last few days, moving above it and then back below it, and then failing and moving back above it and back below it again and again and again. So we do need to get and stay below that 100-hour moving average to increase the bearish bias. Also watch a 38.2% retracement. It's may not be a surprise, but the move to the upside here retraced also back down to the 38.2% retracement level right here. So that is going to be a level of interest on the downside. So get below the 138.2% retracement increases the bearish bias for the dollar versus yen. On the top side, look for resistance right here to put a lid on the pair. If it goes above that level, then I would expect more buying in this pair from a technical perspective. Finally, let's take a look at the sterling versus US dollar. I'm looking at the hourly chart here and trading here today, today and yesterday, I guess. The price moved below the 100 or 200-hour moving average. It's green line and chart right here. We also moved below both these 100-bar moving averages. One of them is the 100-bar moving average of the 4-hour chart. One is the 100-hour moving average. That should have sent the price lower yesterday, and it tried, but then it failed, and the market moved back higher. The thing is that they moved back higher. It did find resistance sellers against the 200-hour moving average, both here and here, and the market started to rotate back to the downside, and that rotation has now taken the price below the, this key swing area through here between 126.74 and 126.85. I talked about that in trading in the videos yesterday, but we also have this 200-bar moving average on the 4-hour chart in play. So we are seeing some dip buying against that level. We're currently trading at 126.85, which is right near the high of this swing area. So we'll see which way it wants to go, but certainly there's reason to buy in this area from a technical perspective with a stop on a break below for those risk-focused traders. What risk-focused traders would hope for is that they buy against this level and start to move back above the 85 level, and maybe move also back above this low right here. If we start to do that and see, we could see further upside potential on the fail break of that swing area floor. So there you have it, a look at 3 of the major currency pairs to kickstart your trading day this Friday. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.